Okay, good. All right, and you should be seeing the disclaimer page, correct? The welcome.
Yes.
Okay, great. Let's get this. All right, let's get this disclaimer out of the way, and we'll get started here. Trading in foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all this risk associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room and is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during this live session is not a recommendation or a suggestion that you should do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies rules for entries, exit targets, and risk management. Having said that, let's get to the charts. We had an alert this morning. We had a couple alerts. We had one for the US Swiss at 7:15, and all the way back at 4 o'clock, we had one for the New Zealand US. Both are actually pretty much in place still. The US Swiss had one last night, way back here at 8:45, and it gave us another alert. Yes?
We don't see your charts.
Oh, okay, I guess I need to.
Yeah.
All right, let me see what I'm doing wrong here. Stop sharing. Share screen. And where is my charts? Splash page. Here we go. Meeting control. Maybe this might be it. New share. Let's try. Well, let's try this one. Let's see if you see my charts. You see my charts now?
Yes, we do.
Okay, good. All right. Never quite know what I'm looking at where I'm showing when I'm on my laptop here. Okay, so let's start this over again. We had a US Swiss at 7:15 this morning, and all the way back at 4 o'clock this morning, we had a New Zealand US. Let's go with the US Swiss first. And there was a US Swiss trade all the way back at 8:30 last night or 8:45 last night. I'll come back with my 15-minute chart. And I drew the wedge off of that one. And what happened was it didn't do anything last night. From Sunday evening, there was like no movement at all for hours and hours. It did absolutely nothing. It didn't do anything until about 2 o'clock this morning. But then at 7:15, it gave us another alert. But this AC trend line is still valid. And this is what you'll see a lot of times when you get an alert and then you get another alert. The first alert, oftentimes the trends, if it's a decent trend line, if you have your wedge drawn right, will still oftentimes hold. And you can see where after this broke and it came back and we got the other alert here, but it came right up to this AC line. So what I'm going to do is I'm just going to slide this on over to give it. Here's an anchor, here's a hit, here's our rejection of the trend line. And as the alert happened here, it was an ascending wedge. So I'm just going to take this, and I'm going to keep the BD line as well, and we'll see if that still has effects as well. But we had the alert at 7:15. It was an ascending wedge. And so the way I drew that one was I just ascending. So I start with my A down below, bring it up to significant high. You can see down to before the wedge. And then my D comes up to a flat line above, right, pretty much right where the trend line was. And you can see where it went right back up into the original trend from last night, hit at the top of it, came back down, rejected it. Now it's coming back, and then we're seeing, right now we don't really know which way it's going to go. Right now the RSIs are saying it's becoming more and more of a long, but I would not take it until it breaks out of the top of where the C area is. If it comes back, it could reject this. It does seem to have a little bit of strength to the downside, although the dollar is showing stronger, not by a lot, but a little bit. So we have some dollar strength on this on the 15-minute chart. So I'm just going to hold off and wait for some confirmation for it to break out of this range.
Al, I've got a question.
Okay.
Do you take into consideration the overall trend, say, in the last couple of hours?
I look more at what the trend is in the last couple of days, and I'll see if I see a trend happening within the day, then I'll take that into consideration.
Okay, thank you.
Yeah, they're just it varies how far back I go for what trend I'm looking at, especially with the overnight sessions. Because you can see, like, even like for Sunday night, there's not a lot of movement going on. It was very, very tight range. Yeah. And then it wasn't until later on that it broke. So I'm more concerned about where I can draw my pivot high, my pivot low, basically that white box that I'll draw. I'm more concerned about that than I am about the overall trend, because right now this thing's all over the place right in here. It came, nice trend down, spiked down, formed a low, came back up, kind of retested this white box was a box I drew from last night. It broke the box, came back in, tested it again, came back, broke it again, came back basically into the same box area. So there's a lot of activity going on inside this range, but it hasn't really come to any. So basically, it's just been going sideways in and out of this. So until it starts getting a little bit more clarity, I'm just going to stay out of this trade, because I mean, you can try and trade it, but it's kind of just. And I the fact that it challenged this heavier yellow line several times. I'm just going to take this one off because it's getting too crowded here. If you take this from over here from last night and just draw a straight trend line from here to here, if I get it to connect here, there we go. You see you have lots of hits all through the night last night and then again this morning.
Yeah.
So
yeah.
once this, and that's why you can't ignore these higher trend lines, these higher time frames, because when we're on a 5-minute chart, I mean, yeah, we're trying to get to 5 to 7 pips, but when you have a really tight range and you have really, I mean, this spread on this is 1.7. That's almost a 2-pip spread. You give another point for commissions. You need, as soon as you get in the trade, you're three positions, 3 pips underwater before you even come out of the chute. And so that makes it harder when and this range still isn't all that exciting. No, I mean, it's basically 16 pips. So that's why I'm be waiting for this thing to break out of this range right now. Now you can form almost like another little subsequent trend line with your D as it breaks where the alert was, came up, tested that line. It did form there's a hit, here's a hit, but we're on a 5-minute chart. But again, until I see some confirmation of some moving averages or some confirmation of the RSIs, right now the US and Swiss it's a 4 and a 3 on the 5-minute. They're still kind of fighting each other. They're right about in the middle, not a lot of strength. I'm just going to stay away from that one. And on the other hand, on New Zealand, is that's a little different ball game. And we had let me see where we had the alert at this one. We had the alert at 4 o'clock in the morning. And let's see, where do I draw this thing? Get my 15-minute chart up here. And first thing you want to note is that this green area down here is a higher time frame demand zone. And what I mean by that is if you go onto a higher time frame, you come all the way over here, you'll see where all this price action here is coming in, and we have this is where the original move came from before it started retracing. It's basically what it's doing is retesting this area. And if we come over here from where our wedge alert was, come over here, you see a wick, come all the way down to where the wick hits the body. It's really, this is just nothing more than just a big old wick area. So I'm going to put this area right down, knowing that this is where the buyers came in to drive it on up. This was a retest right here. So that was significant. That's a significant area for the retest. And now it's just coming back down and retesting this whole area down below here. And this thing could really take off, and there's another big area right here where here's the wick. This is actually the bottom where that wick area is. As I'm looking at this off of a 4-hour chart right now, you see that there's no wicks at all, hardly any wicks at all, if I can see here. This is the next area where if it can break through this area here, it's got a lot further to go. And that's really what it's fighting right now, is trying to determine whether or not it's going to break through this. So this one is actually, no, I'm not sure we can get into it anymore. This was at 4 o'clock this morning, and I don't know if it's going to give us a chance to get back into it or not. It seems to be breaking down here. Let me see something here. Stand by for just a second. Okay, so let's go back to the 15-minute chart. We had the alert, and this one was actually a little bit more cut and dry, a little bit easier to see right off the bat. Let me do this up a little bit. We had the alert, and here's the Sunday's action from Sunday when the market opened up on Sunday. So here's the overnight. Here's an A. Now I went all the way back over here to, this is basically the area where I probably started this thing, probably right up in here. And here was, you can see where there was a low, and this was it was a descending wedge. So actually I should be starting the A up above. Yeah, started the A up above, found out, looked to see where the trend was. This was pretty much where the trend happened. Here's A, here's a high, here's a low, here's a lower high, here's an equal low, so that's where I put my D. And then there was, as the alert happened, there was a secondary trend with this red trend line. You see from the D, there was, from the C, here was another high, higher low, lower high. Here was where the alert happened right here, so I can move. This is the alert right there. Where's my trend line here? And you can see that this trend line was able to connect with that. So basically here is where the wedge was looking at, but you have to respect the lower part of it. So I try and give the wedge a little bit more room, because I like to have a flat bottom or at least a flat top of somewhere. So that fit the bill there. It came down, This was earlier this morning at 4 o'clock, came down, went back into the wedge. All my moving averages are in the right direction. Came down. I actually did enter this trade right in here, this area. And then we'll go to the 1 minute chart. Let's do the 5 minute here. So I can get, there we go. So here was where the wedge, it broke down. This was the one earlier this morning in the middle of the night, broke down, came back, gave us pretty much a nice little run, but it came right down to where this zone was, right in here. But it only gave us 6 pips. It almost would have gotten you out if you were up at that time. I was still in bed at that point in time. Went back up into the wedge. And I saw where it was still sort of supported with, we had a break here, came back up. Retest, broke, came back, retested it, and right here is where it retested it. And then it came down, now it's retesting the bottom of the wedge. So it's still continuing in the downward direction. All of our moving averages are in the right direction on the even on the 5 minute. So when you got this 5 minute break right here, it closed. This is the entry right there. That was right about 65.26. The wedge still held. It came down, gave me a little bit of a profit. I didn't take the profits. I was still waiting for my 7 pips. Didn't hit that. Came right into this green zone, and now it's retesting the green zone again.
Al?
And yes.
We just received another alert.
Oh, we did?
Descending on US CAD.
Oh, our favorite one. Okay.
That one, yeah.
Okay, well, we'll take a look at that. So anyway, this one is still in play. It's still below the moving averages. The moving averages are outside of the wedge, on our 5 minute chart. And right now it's just sort of tracking the yellow. The yellow is what it's doing. So I'm going to take this one off here. There's no entry right now. If you didn't get in up here, there was not much of an entry. And you had to give it a little bit more of a, like I said, the spread's starting to get a little bit closer now. That's a little bit better. But it was like a 1.7, almost 2 pips. So you may have to give a little bit more than just that 2 pips when you have such a wide spread. That 2 pips is based on a 1 pip spread, just so that everyone's aware of that factor. And let me check something here. Okay, so we have a U.S. Let's see if I can get that chart up. U.S. CAD, and it was
Descending.
U.S. CAD descending at 8:15. I'm just going to change my Swiss one in because we're not doing that one. My computer's slowing up here. There goes US CAD. And we go with the full chart. I need to take something off of here because it's starting to close. Bog me down here. Did I just knock everybody? Tell me I didn't knock everybody out. Okay, so let's check out the alert again here. It was CAD descending 8:15. Get my 8:15 mark up. Descending, that means I'm looking at this thing coming down. So here's a hit. So this looks like where I'm going to start my, I like seeing if I can get all my moving averages inside the wedge. That helps a little bit. So I'm going to turn these off for right now, put my wedge up. We're looking for a 3-point hit. We can start from up here. We can start from down here. It was descending, so I started my A up top. Bring my C over here, tuck that in as close as I can. See, there's a little bit of a hit there. Oops, wrong one. Bring this one up top. See if I can find some hits. And tuck this in as close as I can. And I see we have an A. Here's a hit. This is a hit, so I can slide this one down a little bit. There's my 3-hit trend line. Now it is a little bit steeper here, so this is where it gets a little bit, we have to make a decision. You want to follow just with the bigger trend, knowing that this could retrace back up, or you want to follow another subsequent trend line. Like you can take this one down. This one's still kind of in line. We have a couple little violations right there, but not bad. I'm going to go ahead and we could take this one like that if you wanted to, or you can just keep it back up here. I like keeping, I'm just going to keep that in my C right there. This is my main wedge. Here's the alert. And I'm going to take a note that there is a little subsequent trend line developing right from here. So I'm going to just put that one in just to mark it, because the wedge is relatively wide. And put my moving averages on, see which direction they're going. Right now, the moving averages, I would be looking at it bouncing off the 62. If it comes on up, I expect it to bounce off the 62 and probably get rejected. Let's see where our strength is. US CAD strength is to the strength of the dollar. Dollar is the first currency of the pair, so there is a little bit more strength to the upside. So I'm going to hold off with, I'm going to keep this, keep that tucked in. Here's a hit, rejected, here's a hit. So I like the wedge as it is. Now the question is, I'm basically waiting to see it break out of the wedge. We are going to, I'm going to note this trend line right here from this one to here. And we'll see where it goes. So we're going to take it over to a 5-minute chart, and we'll see if we can tweak it a little bit.
Al, before you can move,
Yes.
can you please go back to the chart you were just on, the 15?
15?
Or I guess if you want to leave it on 5, it's probably fine too. Why wouldn't you make that trend line up to the C? Because if you had the touch of the C.
Well, because I wouldn't have, if I could do that. I don't know if we're going to get a touch, though. I think we're going to get a violation down here. See if we get a violation there. Okay. So this one wouldn't be, this would make this invalid. We even got to close up there. So that's why I wouldn't want to take it from to here. So where I still have a hit without having the violation of the trend. So this is really a subsequent trend right here.
Yeah, I see it better on the 5 than the 15.
But that's a good question. That's a good question. Because this is still a very important area. If it does break, this is where it has to get through before it's going to come up. One reason I like having these trend line, these intermediate points, is that once it breaks the trend, this is going to be your first area where you're going to have some problems getting through, because this was already a point being tested. So this is still going. This would be a target area up here. Let me make this a target. I can do that. Let's see, settings. Nope, not a template. We'll just make this a target right there. Should be yellow. There we go. And so we're on the 5-minute chart. We're going to kind of just fine tuning this thing. Again, you take note that your moving averages are actually pointing So it did come up and violate this 5 minute 62 before the alert. But it was still rejected, came back down. So we know that there's some sellers up in that area. Let's see, with this trend, trying to get this, move this up. So if we get the break right now, we have the dollars. Dollar is the first currency of the pair. Let's see where the currency is here. The CAD's stronger now on the 5 minute chart. The CAD took over the strength. So therefore, right now we'd be trading more in the, looking for the break to the downside. We had a little bit of a hit here from, let's see if we can adjust our RB a little bit. That's pretty close there. We had a little bit of a violation. We couldn't get the close below here, so I'm going to hold this D. Well, we can actually put the D right back in here. It's not going to be more than a couple pips difference. See, we had, this is before the alert came up. So right now it's inside this red yellow box area. It hasn't broken out of that since the alert. So that's basically, you can see we're just getting a high, a low, a lower high, a higher low, and then eventually we'll see where it's going to break. We look at our strength meter. The CAD and US are still, they're fighting for last place, which seems what they do a lot. But once it breaks, then we'll see where we go. Go to a higher time frame chart. Right now we're inside the wedge, so we have a little bit of time here. So let's go to the higher time frame. Put it back on a 15 minute. And let's see what we look at. See if it breaks, we're looking at the B area. So if it breaks this D, this is what we're looking at for the next point, because there's really nothing in between. There's a lot of white space, or a lot of open area here. Nothing challenged it. So if it breaks this, we're looking at the B. So I'm going to put a little line across here for a potential target. And let's see how much room we have. So if we measure it from up here, this is at 32.26. We have about 20 pips to the downside and the Fibonacci marks. This would be a potential target from 27 to 17. There's 10 pips there, so we have 10 pips. So if it breaks to the downside, this would be our first target area right in here. And I would put that pretty much right in this area. And we want to draw our we have basically a 2 pip spread, which I don't like that much of a spread. It seems like spreads seem to have widened out a bit here the last few days, or at least since last night. It seems like the spreads are a little bit more than what they normally should be or normally are. And we need to take that into consideration when we take these trades. I think part of that is that they just don't know what the volatility is, and they're just giving themselves lots of protection. So here's our.
Have we checked the news today?
I did. Well, we will check it. That's a good point. We'll see what kind of news we have. 28. I'm going to take us down to 25 right there. And let's see the news we have. Sunday, we want the news for the 17th. We do have it. We don't have anything pretty much all day long until 9:30 tonight with the Australians. So it's pretty quiet news day today. How's our New Zealand doing here? It's coming back. It's just been going sideways pretty much ever since it broke out of the wedge. It's been going sideways. It keeps on coming up, testing the wedge, testing the bottom, testing the wedge, testing the bottom. And this range in here, you basically have you have to be right on the money to be able to get your entry, get your 2 pips. With the 7 pip range, it's really hard to get 7 pip profit out of it. You're lucky to get 4. So that's probably another one we're staying away from right now. Especially you have this big area down here where there's a lot of, looks like this is the area where a lot of buyers want to come in. So I expect this is going to go sideways for a bit. Back to the CAD. This is our area that we're looking at. This is our Fibonacci, 15-minute Fibonacci line. I'm sure that's correct. No, that should be a 5. That's a 5-minute. And we wait. Take another cup of coffee, drink the coffee. So right now what we're doing is we're respecting this wedge. And actually, when we had this alert, we could have just as easily drawn the wedge from this descending wedge from this high to this low, to this high, to this low. But again, we want to respect the fact that this is a 62 moving average. These haven't crossed yet. This could just be coming up to retag the top of this and then just reject it back down again. The only weird thing I don't like about this trade is you have the upper trend line that's been rejected several times, and you have this 62 that's here that's been rejected once, almost twice. And the distance inside the wedge from where the alert was to the bottom of the alert, you have 19 pips. So if it does get rejected, if it gets up here, it gets rejected, it's possible to maybe get your 7 pips somewhere in the middle here. But generally speaking, when we're talking about these wedges, we look for the breakout of the wedge, not so much the inter range of the wedge. Any questions so far?
No, thanks.
How many people do we have in here today?
We have 6.
6, okay.
It's Monday morning.
I'll tell you, yeah, Monday mornings I don't take a lot of trades on Mondays just because I like to see the market kind of settle in on Monday to try and get a little bit better ranging for, let me see if I can, what I'm going to do is I'm going to, let's check, see who's here. I'm going to allow, since we only have 6 people in here, I'm going to allow you guys to talk and ask questions if you would like. I think this is, if you have your mic, if you have a mic on, I'll allow you to, let's see, I think you should be, and yes, if you want to turn your mics on, you're welcome to, and just ask questions, ask away. And not much to do other than sit on our hands and wait.
Okay, I'll just have a quick talk before I go. Can you hear me?
Yes, I do.
Okay. All right, so before I begin my training, I always look at retail sentiment. It works on all the time frames because at the end of the day, wherever the retail sentiment is going to go, even on the daily, I prefer to take trades, even on a smaller time frame, going in that direction.
I've never looked at that, so I really don't have any experience or comment on it. If that's something that you found that works, is maybe something we should investigate.
Well, I think Brian touched on it, which he uses on his other sort of trading long-term frame wise?
Well, yeah, he uses the SSI. He uses a lot for his long term, and I guess is that the retail sentiment you're talking about?
I get it off IG Index.
Uh-huh.
I'll put
Yeah,
the link in there in a moment for you guys.
Yeah, we use that a lot in the swing trading that Brian does on Monday nights.
Okay.
Right, Jen?
Cool.
I don't know how well it works. I mean, I've looked at the SSI, and actually this RCS tool is somewhat of a variation of the SSI, and that's probably that's what we're doing for the most part. That's where we're getting a lot of. That's not what it's got that factor involved with. Let's just say that. And if I look at the overall markets of all the currencies on the different time frames. This is the RCS tool, and basically this is looking at the 8 major currencies, and right now it's showing that the Aussie and yen are the strongest on the 4-hour chart and the 30-minute chart, as well as on the 15 and on the 5. Well, it's not so much the 5, but the 15. So if we were trading, say, like the British yen, we'd be looking to trade that in the direction of the yen. That's going into a little bit different than what we're doing here, because the only alerts we're getting are pretty much U.S. based. But one nice thing about this RCS tool is that if you don't have an alert, and we're just really focusing just on the alerts and this and how to play the alerts out, you can look and with this tool you can look and see, okay, take a look at the British yen pair and say, well, maybe there's a trade there. Maybe you can find a wedge that's that you can now pick out. Maybe we can even try that a little bit while we're waiting for this thing to develop.
That's a good point, but I find too many indicators makes you hesitant to get into a move and can also get you into the wrong move, because most indicators are lagging indicators. Yes,
that is very true. And that's one reason why I like really looking at the price action analysis, learning how to analyze the price action. And that's the other part as I like with this Fibonacci price range plotter that we have. It gives us basically key price points where the bigger money basically goes to make the higher the time frame, the more support it has. And that's one reason why I like seeing, especially like on a 15-minute chart, I like seeing where the points are on the 15-minute chart. And then the breakdown of the 5 and the 2 are just variations of that range inside the 15. And you'll see.
What you've got to remember is the reason why I look at client or the retail sentiment is because the banks are trading against us, and they will go against retail sentiment. They manipulate and they can hide it in the $1 trillion market. They can't hide it in stocks and shares, but they can hide their manipulation within currencies, FX, and that's exactly what they do.
Sure. No, I wouldn't disagree with that even a little bit.
Because most of the banks over in Europe have been fined for manipulating the markets, but it's nothing. And if you go back to the time when they with the US banks did the LIBOR rates for the mortgages, or what you call bonds, so I just want to go with the banks and not with the retail guys. That's why 95% of people lose money.
Yeah, and that's why Brian likes using that SSI as a contrarian. Basically, if everybody's going long, he wants to go short because most people are wrong, or the banks are manipulating most of the people to go in the wrong direction. Yeah, I totally agree with that. They
conclude together. They work together, and they can get caught. When they do get caught, they get a massive fine, but it's only a day's trading to them.
Right, that's right. It's just cost of doing business for them.
Yeah, because they all know what indicators we're looking at, and they don't use the indicators, but they all know when we begin our Forex trading, we all use the same indicators, and they know that. So we're all going in the same direction when then they take us up because of the stops. And also they hunt the stops down with algorithms now, since I think that happened since 2011.
Right. No, you're absolutely right. You're absolutely right.
But I'll share in a moment the link I use so people can look at the client sentiment from IG Index. But You know, that's just my way of trading. It's not the right way and it's not the wrong way, but everybody has different ways of trading.
Mhm.
Well, certainly is something that's worth taking. If you would put that link in the chat box, that would be for everybody to take a look at that. That would be helpful.
Yeah. And on that note, I wish you all a good Monday because I've got a Zoom with a potential client, and I catch up with you
Okay.
guys tomorrow.
Well, thanks for your input and have a good day.
Thanks,
Thank
Jake.
you. Take care now.
You too. Al?
Yes.
Alan had put in the Q&A, besides the wedges, the US CAD looks like, with wicks, it's a W at resistance. In other words, a double bottom hitting resistance, but it's tracking within the wedge, obviously.
Yeah, and actually that's where, I mean, what happens, well, I hesitate to get too deep into too many different ways of defining direction, because we're really trying to focus on trying to keep things as simple as possible with where we have the wedge alert, we draw the wedge and wait for the breakout. There are a lot of other factors, and Matt's actually really good at some of these things. What we call with pitchforks, harmonic scans, and that is another factor of seeing price patterns. We're not getting into that, at least not yet. There's a good chance that maybe as time goes on, and we get more people that are here that are routine in the advanced type settings, that we'll start looking at some of like the different harmonic patterns, and we're looking to see where these prices may end up changing and where they go. But I really can't get into that part right now because we have so many new people sometimes that all does become totally overwhelming. And the whole purpose of this session is just to learn how to trade these wedges when we get the wedge alerts. But you're absolutely right. There's and one thing I'm looking at right now is the fact that we have a low here with this D. It came back up, and it wasn't able. Well, this is Canadian. Let's look at the New Zealand. This was actually a good one, where we had had a little bit of a divergence, I believe, if we look at this thing closely. Let me get my other chart up here. Here's a low. Here's a low on the RSI. Here's a higher low on the RSI with a lower low. This was a divergence. And a lot of times what you see, once you get those divergence, then when it breaks out of the top, it could be going to a lot higher. But I'd be looking at this area up here if it breaks out to the top. It's still respecting this wedge, this trend line. It broke, came back, tested it, broke it again, tested it, and then it took off to the bottom. And now it's retesting this trend line. And as you see, this upper trend line and this lower trend line are starting to merge here at the end. Eventually, this thing's going to break through one way or the other. But you also have, this is one of the price points we were talking about, where the institutions and the higher time frame it's going to have to kind of break through this as well. I said, being a Monday morning, I said a lot of the institutions they're just getting their position for their move for the week, and so they're buying rather tight ranges, selling in tight ranges, trying to get their positions so that when they come Tuesday, Wednesday, Thursday, they can drive the market in one of those directions that they want, and then they start making. That's where they make their profits, and we just have to be aware of that.
Ral, do you think that maybe when the US opens, even on a Monday, it starts to pick up a little bit, would you say?
Yeah, I think it will. Yeah, right now we're still trading in the London session. We still have another 15 minutes before, actually more than that, an hour and a half before about 45 minutes before the US market opens. So, and you will start seeing some positioning before the US market opens because they already know about where they're expecting the dollar to go. And that's one nice thing we have about with this, right now we're showing dollar weakness on this New Zealand pair. And if the dollar is weak on this pair, well, right now it's at a 0. So on the 5-minute chart, on all the charts, all those 8 pairs, it's at a 0. And let's see where it is over here on the 15.
Wow,
So
I never saw it at 0.
Was that?
I never saw it at 0. Maybe I'm not vigilant enough.
Well, it's the ranges are 0 to 7 for all 8 pairs. So
Somebody see.
yeah, so basically 0 is basically the lowest pair, 7 is the highest pair, the strongest pair. Because there's 8 pairs and 0
Right.
is still, they could have, I don't know why they didn't just make that a 1 as opposed to a 0, but they did. That's what they did.
Didn't mean to distract you. I just found that
No.
rather humorous. And I don't mean anything like the U.S. dollar is a better currency than any other in the world.
No,
I was like, whoa, first time I saw that.
Yeah. So
Sorry.
it's been well, with all the quantitative easing, with all the printing that's going on right now for this trying to get the economy back running again, it's been pretty weak, and it hasn't been this currency you want to be trading in its favor unless it's just on a major pullback. Let's see, how's our CAD doing here? Still hanging out in between.
Actually, what surprises me is that it's even weaker than the Canadian. And this is speaking as a Canadian.
Well, it's so much of the U.S. CAD is tied to oil, and if you ever watch the U.S. CAD and the price of crude oil, you'll see they kind of go up and down in opposite directions. They're kind of negatively correlated, but it just really boils down to oil for the U.S. CAD. That's the primary driving force of where this currency goes.
It looks like it's starting to coil a little bit more, though.
Yeah. But you see, it's still making lower highs. Here's a high, lower high. Here's a low, higher low. And it's just staying inside this area. Now, the thing is, once it breaks, it could just break up just to get everybody. And this is what our friend from the UK was talking about, was that the brokers will start driving the price up, get everybody taking the trade long. They'll come back in, so they'll have a tight stop. They'll take everybody's stops, and then they go and they drive it back up again. And you can see a little bit of that where they did that on with the New Zealand this morning, but they're still kind of doing it right now. Where it broke, came back up, retested this. But these are some significant swings. This is just enough to say, okay, everybody's going in there. We're going short. Strong move down. Comes right back into where the buyers are. Drives it back up. Retest this way, this little trend line right here. So this is a significant trend line. Now, these markets have been relatively difficult to trade these last couple of weeks because they'll break a wedge, they'll get you in about 5 or 7 pips, and then it'll come back in, take your stop, and then it takes off again in a direction that goes for another 50 or 60 pips. And that's where you have to kind of give it a little bit more wiggle room. And I've actually started giving things a little bit more than just the 7 pips, trying to get my 5 pips and maybe giving it 10. It's kind of backwards, but it seems to work a little bit better. But if you're just trying to keep your stops tight, and then try and catch some of these moves when they really does break out. This one still is kind of hanging out in between this spread and this area right in here. This trend line this other trend line is still somewhat valid from where the C is. See where here's anchor, here's a hit, here's a hit, here's a hit. Strong move away from this area. And I believe we had divergence here. Here was a low. Here was a lower low. We actually have a little downward trend coming in. So it's actually formed a little bit of a channel, a descending channel. Came right up into the 62, maintain the trend line. We do have the cross of the 5 and the 13 right down here, right at the base of the first wedge. And right now we're showing New Zealand strength. That'd be to the upside. That's on the 15-minute chart. Strong crossover of the 62. And we're just about ready to get the 15 or the 13 and the 62 to cross, which is significant. So this thing could very well break to the upside with New Zealand strength. Right now, we would not want to be taking it short unless we get a pullback. If we can get these RSIs to pull back, hook, and still maintain this area right in here where the 62, 5, and 13 are all consolidated, and get a hook there, that could be the place where you want to try and get in. If you want to try and get an earlier, more aggressive entry to see if it's going to break the upside, but it still has this one to get through, and then this one to get through, and then you have this together. It's like 3 different barriers. And price between here, the 36 to the 46, you would have to, if you could get a good entry off of this break, you'd have to get all the way up here just to get your 10 pip, or basically get your 7 pips out of it. Off our whole moving averages are green, so that's a good sign. You see this is a strong move down. It's actually forming a little bit of a wedge right in here on the 5. You look on the 1-minute chart. So here's still the bottom of the original wedge. Let's see if it comes down and retest this. A little bit of a sloping, and here's the bottom. I'll make that the bottom here, because we don't know where this one's going to go, how far it's going to go down. It did make, here's a high, here's the higher low, here's the lower high. It did break this one. You see how the flip now to the dollar being stronger. This is on the 1-minute chart. So again, this is probably just a pullback. Just gonna flatten that out and see where this takes us. Take a look at our CAD. That's still sitting here.
It's not doing much of anything.
No, I say things are really, like I said, they're 32, 37, 26. It's 11 pips. That's on a 15-minute chart. Look and see what the average true range on a 15-minute chart is. I'll put that one up here for you. Right now, the average true range is 7 pips. That's pretty slow on a 15-minute chart. That's on a 14 period ATR. It's saying that the average of all these last 14 candles, the average was only 7 pips per candle. And so that's just really, it's really just really not tradable. I think it's just important to see what setups are good to take the trade and which ones are to stay away from. And I don't always know the answer to that. Again, your spread here is 2 pip spread, almost a 2 pip spread. So if you only have if your average range is 7 pips and you have a 2 pip spread, you're going to lose 2 pips just to get into the trade. If you have a commission, you're going to lose another pip. So there's 3 pips. And the best you're going to do is get 1-to-1 about break even. Because you're going to need to go another 3 pips just to get out of the spread. And so these things can flip around all day. If you even look and see where the RSI, the 8-period RSI, never even got up, barely even got outside of the 60-40 range. The 3-period got up to the 89, got down here. Now if we were to look at this, see what kind of range we have. So this was the peak right here where, so that'd be right here about where the C is. Let's move it over here just for reference. And then it came all the way down to, here's where the low was and that was after the hook. So from here to here, try and judge in range. And that was 20, looks like 21 pips there. That was starting at midnight last night. So basically it went 21 pips from just 15 minutes after midnight last night to 3 o'clock in the morning. Let's see from here, see that's 32 to 58 to low, and makes you 25 pips from midnight till 6:15. So 6 hours only went 25 pips. Now we're looking to see if it's going to break down to the downside. There's a 15-minute chart. Let's get back to our 5 and 1 minute charts.
Al,
Yeah.
we had a message in the Q&A that it's a very busy chart and it's almost causing vertigo.
Which one?
I guess
All
the
of
one
them?
that was just on.
That was the 15-minute. Well, let's see if it looks as bad on the 1 minute here. I wish I knew how to get the information that I need to look at less cluttered. I mean, I can turn some things off, but then you're losing some valuable information.
Oh, this is it, right?
I mean, we can just look at just straight price. The problem you run into is that you don't always know there's some factors that you need to know. Where are you in the big picture, especially if you're on the 1 minute chart? Where are you at in the bigger picture, reference to the higher time frames? And I don't know the answer to that. I wish I could make them less cluttered. I really do. And oftentimes I just keep turning things on and off just so it doesn't do that. But you still have to know where you are. Like right now on my 1 minute chart, I want to know where my fib lines are. I want to see what my range is. So right now, here's my 7 pip range from here to here. It's inside that 7 pips. If I'm going from point to point, going from red to green, if I'm in here and I'm trying to target my blue, I need to get some sort of momentum out of this area so I can reach the blue one. We may get it on this one actually. This one actually may be tradable as we get closer to the opening of the market in another 30 minutes.
Yeah, like presently RCS, is your CAD is what, 6 or 7 there, Al? The US.
The CAD is I can't hardly see it myself here. That's supposed to be down below. Hang on, let me see. Yeah, CAD's supposed to be, CAD's a 6.
Mm-hmm. Okay.
So CAD's a 6.
Thank you.
Something's not right here on my chart layout here. There we go. Now it's back to where it's supposed to be. All right, here it's coming. It's starting to break out. I'd start looking at a possible setup for a trade here. Moving averages are in the right direction on this one. And moving averages on my 5 minute. There's a strong rejection of that 3 pip line. All my moving averages on my 15 minute are in the right direction. Let me get my chart up here. And I'm going to try and check this trade.
You're taking it short, I guess, are you, Al?
Yeah, I'm going to take it short.
When you can, Al, if you can amplify that 1 minute chart.
Okay,
Thank you.
there we go. Got a nice, came down at base right before the wedge, broke the wedge, came down, and I took this as a market entry right in here. And see if I can get this one to show it here. Trade panel. So I have this thing set up. Nice. Every time I change my charts, I have to reload my wand in here. And we're going to try taking this thing short. I'm trying to do a sell stop right at 32.26. And we're in. Excuse me. 7 pip target, 7 pip stop.
God bless.
Thank you. There's our stop way up here. We don't necessarily have to let it go that far. And our take profit came right down into where where we had our little box drawn. So we'll see if we can get there. Now we're in the trade. 1 minute. I'm going to go to the 5-minute chart.
Excuse me, Al. I think your screen is frozen.
Oh, it's still frozen? Oh,
Yes.
there we go. Is that better?
Yes. Yeah. Now I can see your. Yeah. Okay.
Okay.
Great. Thank you.
Yeah. When I pause it, you can see the screen, but then when I pause it so I can switch frames without having you lose sight of what we're doing, but also so I got to switch panels in order to get my trades in sometimes.
Sure. So what did you end up getting in at?
My fill was, let me take a look and see.
Please.
Looks like I got in at 32.24. So
Okay. Thanks.
let's see if I can put this in here. 32.24 was my fill. So you see my fill was, even though I pushed the market order way when it was still in here, 24 was my fill. And if I use a 7 pip, see the 7 pips actually takes me way below here because of where my fill was. Right now, if I get a cross of the green and yellow on the 1 minute and it challenges my 62 on the 1 minute, I'll bail on this. Right now, my stop on here is right at the top. There's this nice big move down, base, down move. My stop would be all the way up here. I don't want to see it close above this area right in here. Everybody still hear me, or did I just lose everybody?
No. You're here. I mean, we're here.
I heard a sound that sometimes sounds like my earbud ran out of juice. So if it gets quiet for any period of time, I'm going to be asking that question so I can change my other earbud in.
You sound like a communications commercial. Can anyone hear me now?
See, I was just basing right inside this area here, just trying to decide if it wants to break down or not. This is one reason why I kind of like going to a 5 minute, because it doesn't play with your head so much. You can just, you're looking at 5 minute candles rather than the 1 minute candle. And I do like to see where the 5-minute candle closes inside the wedge. This whole area right in here should hold. If it does, then something's wrong, or it's not going to perform the way we're anticipating it to perform. You have all these candles right here, all these wicks. We got the close below all the wicks. We got the close below the trend line. And so right now I want to keep my stop somewhere above these wicks and above this 5-minute red candle. If this thing starts trending, which is what we're trying to have it do, it should be making lower highs and lower lows or lower highs and higher lows, or excuse me, lower highs and lower lows. It broke this series here, came down. We had a big rejection. Now we had the close below this blue candle right here. Once we got the close below that, once we got the close into the wedge, this part should hold. If it's going to break down, it should start breaking down pretty soon. Also keep my visual stop. These are all visual stops. I don't have my hard stop set in down this low. And a lot of times, as long as I'm sitting here watching it, I don't always put a hard stop in, just because I don't want the brokers to see where my stop is. If I do put it in, I usually put it up high enough to where it's not going to hurt me if I get a real strong spike to take me out, but also keep it out of harm's way to where it's not in the line of fire. As you see, as the prices keep marching across to the right side of the chart, you'll see this trend line up here keeps on sliding down. So if you had your stop all the way up here above where the candle is right now, as it marches across, you can continue to lower your stop a little bit. Right now, that gets right up where I put it right now. That's only 11 pips. That's pretty much out of harm's way. It's above where this trend line is, and if something happens, if it goes above that, then something's not quite right. I don't plan on letting it go 15 pips before I get out of it. As you can see, that if this thing has been ranging inside this red and yellow area, wedge area, we had the break. It could very well come up and retest this trend line. But you can see this blue candle came down. It wasn't able to come up even as high as the trend line. So this blue candle is still it's still in play, but it's still, sometimes as the trend starts to develop, as it starts to break out, you'll start seeing it pulls away a little bit more from the moving averages, pulls away a little bit more from the trend line of reference, and it actually starts a little steeper angle.
Quiet room this morning.
Yeah. 15 minutes before the market opens.
Well, we have more people coming in as it gets closer to the opening of the U.S. market.
Everyone sleeps in before then. By that time, we're about ready to be done with this thing. It's good to see a few more people in here.
Yeah, you have 10.
Yeah, we closed down at 9:30 here today. So I can see a nice little break. And we're going to look for a fib line down here on the 5-minute chart. It's 32.17. That's pretty much where my target's going to be, just a little bit above that. I've got mine set 32.18. Any other questions as we're winding down this session?
Your white box there, Al, that's your 4 hour?
Yeah, that was the zone on the 4-hour that I found when I put on the 4-hour chart and went all the way to the left.
Mm-hmm.
That was an area where I saw that the would be a potential, and also it's probably pretty close to where my A is, or my B is. Actually, my B is all the way down. It's down lower, but you can see, let's see if I can spread that out a little bit.
Because your target is just piercing that,
You see, like right here, there's a series of wicks. The wick, there's a body, and here's a strong body. So I'm taking it right below the bottom of this. Now this is on a 5-minute chart, so keep that in mind. To the body, and so that's where. So I'm just looking at once it breaks the top of this, it's pretty much going to go all the way down to the bottom, and then maybe even down a little bit lower still.
Okay, and then that's where because then you have the wick from that almost like doji type candle to the left of that, and then you have going down to your B. I just wanna make sure I'm getting.
Yeah.
Okay. Thank you.
Let's come in retesting the wedge again. A little bit of a pullback, but again, it's still respected the top of this. So far, it's still respected the top of this red candle, which is where this move originally started from. Now this blue candle came down, closed with a couple of red candles, and then after this little blue candle just dropped on down, and right now, so this is where, again, this is sort of basing in that area. Seems to be more and more common that when it breaks the wedge, it goes back into the wedge and then gives us a second opportunity.
Yeah, it's kind of sluggish. Doesn't matter which pair
Yeah.
I'm looking at.
Yeah, it just, again, I think it's kind of a Monday morning. Right now, it's a Monday morning before the market opens. So 10 minutes.
Yeah, price just moving sideways right now.
Yeah.
And also the time of year being summer.
Yeah, a lot of people are some people are still, well, they're kind of wrapping it up a little bit. I know a lot of kids are back in school starting this week, so a lot of summer vacations are probably done. But this is the time of year where it's August is an interesting month sometimes. This is where a lot of times it's nice to keep your stop above the. If you start seeing another trend that is following, try and keep your stop above that, because if it keeps on tagging, this is still, it gives it the wiggle room that it needs to breathe a little bit, and then eventually once it breaks, it just breaks all of a sudden. Unless you're in it when it breaks, you're going to be hard pressed to get into it. Then, at least with any type of a. So this is one of those pains you have to kind of go through sometimes just to be able to get into the trade. I like it where these are starting to come out of these RSIs are starting to come out of the 40-60 zone, still pointing down. The CAD is still strong, not by a lot on this 5 minute. See what it looks like on the 15. ATR is still about the same.
Alan makes a good point. He says summer slowness, question mark, question mark. Everyone, including the banks, have been at home or trading from their vacation home since March. The summer slowness.
That's probably very true. There's a lot of people a lot of bankers are probably working from home. Everybody's on computers anyway. There's no reason they can't do the same thing at home. And I know a lot of businesses are keeping their people home. And where's my RCS tool on my 15-minute chart? There it is. CAD's still strong by 3. CAD's the second currency of the pair. We're looking, if it's strong, we're looking for this thing to go short. I'd like to see a little bit more of a spread on this than what we're getting, but we're going to just take what we get. We're already in I'm already in this trade. It's still respecting the moving averages. It's still respecting this upper trend line. It did come up and test the 62. Couldn't close as a nice blue candle came up and tested 62. It also tested the trend line, broke the 62, tested the trend line, couldn't hold it, pushed right back down again. And that was a good sign that this trend is holding. So as we march along to the right side of the chart, this trend line is getting lower, which means I can start actually lowering my stop a little bit. Lower right to there. Back to 11 pip stop. Trying to still keep it out of harm's way. can see there's another little bit of a trend. As right now, we're just following the 62, this 13 moving average, this yellow moving average on the 5 minute. I find that to be more effective than on the 1 minute. 1 minute still, usually what you find out is on the 1 minute, the 1 minute 62 is about the same as where the 5 minute 13 is. And right now, as long as you can just get pullbacks up to that and not close above and keep this spread from the 62 on this to keep that widening, you're still in pretty good shape. Going back down into the, starting to look for the market as it's starting to open, starting to take positions as the market opens. This is a fairly new candle. It's got 4 minutes to go still before this one closed. This is a new candle right up here. Let's see what the 1 minute looked like. This red candle was the open of the 1 minute of the 5 minute candle. So the next 5 minute candle is going to open at this is a time reference. This will be the next 5 minute candle open when it's on top of that vertical line. It's a nice strong move down. Now it's basing. Here's a drop. Here's a little blue candle basing. Check our fib lines. Here's our green fib line. If we can get a close below this green fib line, it may get a retest. If we can get a close below a retest, then we should be good to come down to this area.
Al,
Yes.
I've got a question for you about the average true range indicator. How does that measure? Like, I don't understand where it gets its data from.
It takes the it goes back. In this case, I've got it set for 14 bars back. So it takes the high and low of all the 14 bars and then divides it by 14. So so it goes back and just says, find out the range of each bar back 14 range, and then they divide by 14 and find out what the average is. So yeah, so they take the high and low of the last 14 candles, add those all together, and then divide by whatever the range is. In this case, we have 14, and
Right.
That's what the average range is. Yeah.
Okay. Thank you.
Mm-hmm. We are getting a little bit profitable here. starting to work in our favor for a change. We're 1 minute before the open. And we just got another alert
Of course.
right at 9:30. We won't be able to look at that unless see which one it is. It's probably going to be like a Euro US.
No, it's the US Canadian.
US CAD. Okay, well, it's starting to, well, good. We're already looking at it.
Okay, we were faster on it.
This is where I say that a lot of times you'll get these alerts back to back. And they just, it's the same pair, just further down the road, which means the first one really didn't materialize like whatever it was looking at. And it just gave you another alert. And it's probably in the same direction. Let me see.
It is. It's descending.
Yep. Descending wedge. Yep. Well, as now that we are at 9:30, we need to shut this down because somebody else is probably going to be needing the room. So I'm going to, we have the trade going on. You know where our target is. Our target's basically looking for 7 pips, see where the range was, where our wedge was. Our wedge break was at 32.27. So I got in this trade at 32.24. I pretty much caught it off this red candle. Actually, I caught off this red candle in here, got my entrance. Here's where I pulled the trigger. Here's where I got filled, 2 pips below. And now we're just waiting to see if it can maintain this this trend. So all I can say with that is keep an eye on it. Give it enough wiggle room to breathe, but if it starts struggling down here, take your profits early and put it in the bank and have a good day. Any other last questions before we go? Eva, Christine, thank you so much. Yes, Christine.
No, Alan just said, why is that while we are following the US CAD from a previous alert and a new alert comes out, the pair reverses? Question mark.
Well, it's I don't know the theory or the algorithms of why the alerts generate what it does. But it's not unusual for that to happen to where you get an alert earlier and then it basically just stays range bound. But basically what it was doing, it was forming another wedge. If you look at this, you can see we had down move. It actually formed another wedge right in here. And that was from, let's say like in this area, like where it was testing this, the trend line from here to here, came up. We got another alert right at 9:30. And was saying is that, okay, this looks like it's going to, it was descending and saying, looks like it's going to break down. And that's exactly what is, and just, it was that 9:30 candle, as it was 9:30 candle was closing, is what gave that, the alert, the confirmation to generate the alert. A lot of times these alerts happen, and a lot of times you have to be kind of right there in order to get them. But that's just the nature of the beast, I guess.
Mm-hmm. Well, thank you for another informative day, Al.
Thanks for a great session. Hopefully.
So on that note, thanks everybody for being here. We'll be here again tomorrow at 8 o'clock. It'll go a little bit longer tomorrow.
Mm-hmm.
And see if you can get stay green, and hopefully this trade will work out for you.
Okay.
Everybody have a good day. Thanks again, Christine and Eva. Thanks for your help.
Of course, of course.
No problem. Bye, everyone. Have a good day.
Take care. Bye.